Hello and welcome to the CIO update from Emirates MBD. I'm Gary Dugan, the Chief Investment Officer. We're looking at three great democracies this week with a lot of challenges in the United States, in the UK and through December into Italy. Of course, uppermost in our minds at the moment is the US presidential vote, which comes up this week. We could have any outcome. It is too close to call. If Hillary Clinton gets in, we're expecting markets to rebound, the dollar higher, equities to rebound after the recent weakness that we've seen, and bonds probably starting to anticipate almost 100% probability of an increase in interest rates come the Fed meeting in December. If Trump gets in, anything could happen. Indeed, some commentators are calling the equity market down as much as 10 to 15%. It could happen, but we'd see that as a buying opportunity. So the dollar will be under some pressure, and we'll probably see bond yields starting to drift lower only because the likelihood of a Fed rate increase is probably reduced. When we look to the impact globally, much will depend on the aftermath of these elections. Will they be accepted by all sides? If Trump wins, are we going to see some very clear policies, particularly in terms of the interaction with countries like Mexico and other emerging countries where Trump has appeared to be anti-globalization? It's not just the US that's challenged at the moment. Politically, the UK has had its problems post-Brexit, and it got even worse last week when the High Court suggested that the UK government would have to go back to Parliament in order to ratify the vote of the people. This is creating something of a constitutional challenge to the UK, and we're now looking forward to a Supreme Court judgment at the beginning of December. Given that the likelihood of Brexit is now just minorly or in a very small way diminished, this has led to some strength in sterling. But we don't believe it'll be the case over the longer term that Brexit will be put off. We still believe it will go ahead. It's just a matter of time, and hence any significant strength in sterling we'd see as a selling opportunity. The last one we would look forward to, although I'm not looking forward to it, is the Italian vote on reform. This is coming up in December and will be the next focus post the US presidential election. It is going to have a potential profound impact on the EU. Should the reforms not get approved by the electorate, and that seems to be the case at the moment, at least in terms of some of the opinion polls, this could potentially lead to the exit of Italy, joining the UK in moving out of the EU. So this will put some damaging pressure on Eurozone assets at the turn of the year. So I must say, at the moment, politics is not something that's particularly helpful to markets. We're hoping for some clear-cut outcome from the US presidential election. Probably the future in the UK is that the Brexit will go ahead with a slight delay, and maybe the polls will turn around in Italy as we get closer to that voting date. We will continue to live in hope. Thank you.